Hey business warriors, and we have an amazing episode for you today. Today we are going to show you a highly effective tactic for investing in the stock market, and for this tactic to work you do not need to be an expert at reading financial statements or anything super complicated like that. Yes, this really is a relatively simple method, and while this isn't a comprehensive guide, you can use this as a starting point for building your portfolio. So let's go. What do Apple, Amazon, Netflix, Priceline, Google, Intuit, Uber, Align Technology, and Salesforce, and DocuSign all have in common? Now, if you said they're all tech companies, yes, you would be right, because they are, but that's not really what we're getting at here. If you had invested in these companies early on, your returns would be crushing the market averages because they are all industry disruptors. So what do we mean by industry disruptors? Well, let me answer that question by asking some more questions. When was the last time that you went to the library or used a telephone book like the Yellow Pages to find the number for a business? You don't need any of those methods that require cutting down trees to make paper because Google has you all set. When was the last time you saw someone using a flip phone? Again, dinosaur technology. It's obsolete because Apple revolutionized the mobile phone industry, and now it's impossible to maintain the same level of productivity without a smartphone. Not only that, but who really needs car GPS navigation systems, pocket organizers, pocket flashlight, voice recorders these days, because it can all be done with this. By the way, is your new girlfriend coming over for dinner tonight? Better rent a couple of movies. There's nothing worse than awkward silence, right? It's good to have a couple of distractions on hand. Better head over to Blockbuster and rent a couple of DVDs.
Hey, you kids looking to rent some DVDs?
What's he talking about, renting a DVD?
Oh, I get it. Blockbuster's sold, it's creepy. Ha ha. Nobody rents movies anymore. People just don't know we're open yet.
Oh, that's right, they don't exist anymore. Do they even have video rental stores these days? I can't remember the last time I saw one. Now, I'm sure you're all aware that video streaming has completely decimated the video rental industry, and the last few Redbox kiosks that are left will probably get stomped on by Netflix like Godzilla stomping on cars. And how I reminisce about the good old days where we would physically go to a travel agency with my parents and we'd look through catalogs of these wonderful vacation resorts that we wanted to go to, only for the travel agent to tell us that they were full and we'd have to book a different one. Well, that's no more because companies like Booking Holdings, aka Priceline, have disrupted that industry too. In the comfort of your own home, whilst you simultaneously stream movies on Netflix, you can open the Priceline app on your iPhone and make travel bookings. So I'm sure you get the idea right now what industry disruptive companies are, but how do they compare to the Dow? Now, in case you're wondering, the Dow is not something from ancient China. The Dow Jones Industrial Average, commonly referred to as the Dow, is the average performance of 30 large US-based stocks. Here we have a chart of the performance of these companies going back to 2010. And as you can see, way down here, where this bar chart is, lies the Dow Jones Industrial Average, while all of the companies we've named earlier are soaring higher. I've color-coded the stocks here with their performance seen on these lines. Here we have a chart of the same companies with a timeline starting back in 2015. No surprise, these companies have continued to outperform the Dow in both the long term and the medium term. And in case you're wondering how they have performed in the short term, here we have the performance starting in January 2020. Now, as you can see, with the exception of the Ronies hampering Priceline stock, all of the other companies have outperformed the Dow by a wide margin. So is it any coincidence that industry disrupting companies outperform? I think not. In fact, I'd like you to think of some companies that you think have disrupted industries recently and check out how they perform versus companies that have not, like Kellogg's or Office Depot. The industry disrupting companies almost always outperform. Now, you may have seen Cathie Wood from ARK Invest, who has been on the news recently. In case you haven't, she runs the largest actively managed ETF in the world. She got her claim to fame for her staggering performance, shown here on the blue line relative to the Dow, shown here. Her investment philosophy is largely based around buying companies that are disrupting industries. To put that in perspective, 80 to 90% of actively managed funds can't even beat the Dow or the S&P 500, whereas Cathie has beaten the Dow by over 10 times. When others thought she was crazy, Cathie Wood famously predicted Tesla would hit her price target of $4,000 back in 2018, which it did after accounting for the share split. Here we have her company website and her ETF ticker symbol ARKK, which shows the top 10 holdings. And as you can see, one could say that all of these companies are disrupting industries to some extent. Now, I'm not telling you to go out and buy these companies now, because on some of these, the ship may have already sailed, i.e. the biggest period of growth may already be over, like with the smartphone and travel industries, which are probably already saturated. And industries like video streaming, while they still have room to grow, let's face it, we're not in the year 2011 anymore, when video streaming was set to explode and you could probably literally 20x your money by buying Netflix stock. The purpose of naming these stocks is to show you industry disruption and their growth relative to the market. This is not a buy recommendation for these particular stocks. So I'm curious, what industries do you think are set to be disrupted, and what companies do you think will benefit? Are we on the cusp of AI robots taking over the world? I don't know, probably a little bit too early for that. But you could say Zillow and Redfin are disrupting the traditional real estate industry, and you got Airbnb, which just IPO'd last year, is doing quite a good job at disrupting the travel industry once again. I personally have been buying into Airbnb stock because I think it is a great business model, and I do see some industry disruption going on right there. Again, it's not a buy recommendation, but that's my personal feeling about it. So comment down below with which companies you think are set to disrupt their industries and explode in stock price. And once again, this is not a definitive guide in buying or picking stocks. There is so much else to cover, which we will cover in other videos. And if you're interested in investing, well, you're going to need a brokerage account to do that. So why not check out Webull, link down below. You get 2 free stocks for signing up and funding your account. Please subscribe if you're new, guys, for more investing and stock market videos coming up in the next few weeks. We'll see you next time. Bye-bye.